Traders, welcome back to our price action trading lesson. We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart, and structure of the market right now is indicating somewhat of a bullish bias. And as a price action trader, my goal is to always identify the correct channel, because these candles on the chart, they're never alone and naked. There's always a channel being present. So if I want to follow the price action correctly to understand what is the directional bias, I'm always looking for the correct channel. Well, I can see we have break and a new extreme. Right now we're entering in correction, but if I'm going to zoom back and still analyze the overall structure, it is still more bullish. Now right now we entered a consolidation. You can see we have a flat EMA, the supportive indicator, 21 bar expansion moving average, and I have a lot of price swings up and down, up and down. Now once I see EMA exactly in the middle of these bars, this is what we call a congestion. If it's tiny, if it's much larger, we're going to call that consolidation. Now when you're observing structure like this on the chart, you want to understand that this is pretty much a no trade zone. There are only two ways how you're playing the consolidation. You either fade the breakout, but you try to fade the breakout with the direction you traded into a consolidation. Fading means trading against the opposite direction of the breakout. So if we're going to break higher, fading means selling, but you're not selling because you traded up. Okay, so if anything, you're expecting price action to break lower, breakout to fail, and if you're going to fade it, you're going to be buying it. Okay, we traded up, so this is what we're expecting. Or the second way how to trade consolidation is a breakout pullback. We're going to break higher, you're going to wait for price action to pull back, and you're going to look for breakout pullback at the key level. Now, as you can see, price action is going sideways. So this is pretty much no trade zone. I don't really want to force any entry inside of this. And I want to quickly talk about this scenario here, because we have a second entry short, but we pushed above EMA and we have uptrend in play. Now, I was expecting a lower high confirmation setup of the second entry short, but notice EMA didn't reject. Price action broke back above. And this is important. This is a clue that the bullish momentum is a little bit stronger. If you were like me today expecting lower high confirmation of the second entry short, expecting new low for the downtrend, you need to see EMA rejecting and lower high forming below. Once you push back above, that's way too bullish, the bar is way too big, and we are most likely gonna get the second leg to a new extreme. So price action is correcting. As I said, I'm not even trying to take a setup like this. A lot of developing traders, they get chopped in this because it is tempting to both buy and sell at the same time. It's truly not worth it. Now, as you can see, we're breaking below and we have a failed breakout, which was also new high for a central long pullback, second entry long, because market moves in pairs of two. So once you train your eyes to see these two-legged pullbacks, the price action overall will start to make sense. But notice on my chart, it is an inside bar. Now downtrend played out with the break new extreme, which is a good sign. But it is an inside bar, second entry long, you know, it is way more aggressive, I can mark it, but this is not textbook easy high probability setup. But this is what you're looking for. You want to see price action to break out of the consolidation and either fade it, or now that you're breaking higher, you would be interested in breakout, pullback, and if this scale was going to hold, you're interested in buying. That never happened and market continued working hard. So no way for me to take it. And once I see the bullish structure continuing, I have to adapt. The structure is way more bullish. I can use high time frame 10,000 tick chart, for example, and I can see that there is a decent bigger channel, because right now, as you can see, we keep working higher. So the structure is way more bullish and there's always a channel being present. So I'm going to try to look for channel something like this. I was also looking for channel like this with the early break here, because it fits really nicely at the highs. You can see how nicely it fits, but it has the early break. Doesn't really matter. Both of these channels are extremely similar. Important for you is to right now think bullish. Don't even try to be selling. Don't trade against the trend. This is right now a bullish trend. This downtrend only got a 10 for a new extreme and bigger channel is coming into play. So the structured market right now we established is bullish. You can see every single major high and low for the most part is higher. So we're using pure price action to help us understand what's happening in the market. So right now that I know that we have bullish bias and I have somewhat of a key entry point, what am I expecting? I want to see nice two-legged pullback to the EMA or to the trend line, to the key entry point, because this is going to be a place where I'm going to be buying. We have a second entry long, but notice the gap between the EMA and the bar. I cannot really take it. Clear two-legged pullback. Had this formed nicely at the EMA, this would have been textbook setup according to price action rules. But like this, we just need to sit here and watch price action develop. And no way for me to capitalize on taking anything, and just need to be patient. I can redraw a channel like this. I'm going to redraw a short on downtrend. Never forget to redraw these corrections because there's always a channel even for the correction. The trend line will still apply. Okay, so as long as this downtrend is in play, I cannot go long. I want to see break, move to a new extreme, and then I'm going to be interested in buying. Far from the EMA, I cannot take anything. I cannot take anything. We finally created a new extreme. So right now what's going through my mind, a high low, confirmation, visual to like a pullback, expecting to get a new high. But we're pushing back below EMA, no high low. I'm still expecting high low or failed second entry short. We're pushing above EMA, can we get a high low? Okay, we can see that the price action is not offering it. By the time we get a high low, it's way too far down. Signal bar is not great. Excuse me, it's way too far up from the EMA. And the failed second entry short is once again very high up, which we truly want to see price action closer to the EMA. Just because it worked here today, next time you may get trapped on this. There's going to be a little pullback, so unfortunately we can't really take it, even though it is tempting. And you can see exactly, this is why we want to avoid this, because there's just so much room between the EMA. You're buying way too far up. You really want to buy after you push above EMA and price action is much closer. This is why we're using the supportive indicator. It helps us to filter, you know, if we are further from the correction place. Now we have a new high, first entry long, and once again I'm looking for second entry long. It's simple. We are in a bullish channel. There was no break below. We have a new high, first entry long above this bar. Had there been a break below this bar right here, there would have been a second entry long. First entry long, pullback, second entry long. But there wasn't. So technically this is still part of first entry long. So I can't really take it, unfortunately. And now we have new high, first entry long, pullback, second entry long. The signal bar is quite doji-ish. When I was watching this live, I wanted to see better bar. I skipped it, but I'm going to mark it. It is decent enough. You know, signal bar is tiny, especially if you are going to use limit order as well. You know, very tiny bar. So what you're going to do, you wait for trigger above this bar, drop your limit order, stop loss goes one tick below the signal bar, and you can see this worked exactly for actually 9 ticks. So we're scalping for 8. So you had that one little tick bonus. So quick little scalp. That's all we care about. And market continues working lower. So right now what I'm going to do, what's going through your mind? Well, you're not really ready to sell just yet. But there's a big chance we're going to test this trend line or possibly break it. Because we're starting to go a little bit sideways. It's starting to flatten out a little bit. I'm going to respect the brand new downtrend. We have a second entry short, but because we've been trending higher the entire day, I don't think we can take it. It is very tempting because we really feel like we're going to test this trend line here. And this downtrend is going to get new extreme. Very tempting setup, but this is mainly more gut feeling based because next time the structure is going to be just a little bit different. The trend is going to be a little bit stronger, more proven, and you're going to get trapped. There's going to be failed second entry short, which is what you're expecting. So if you took this right here, you're a more advanced trader. A lot of experience, I can see why. And price action continues working lower. Okay, and we have new extreme. I'm even gonna connect the first 2 swings here. So right now, I expect new high for this uptrend according to trend line rule. So if I'm gonna go long, what I need to see? Well, first of all, I want to see push above EMA and EMA holding. That is important. As long as we are staying below EMA, there can be many smaller pushes lower. Okay, that's the whole goal. We want to see that the buyers are back in the market and they expect to get new extreme. We want to see their interest. So I want to see push above EMA. And I want to see failed second entry short. High low in this case would not be enough because it is not really confirming much. The downtrend is quite significant. We really want to see the push above EMA and a failed second entry short. Can we get it? We only have high low, but it's below EMA. Too much congestion. 1, 2, 3, 4, 5, 6 bar stack. I can't take it. Still congestion, still below EMA. Okay, so nothing. Okay, nothing back below EMA. And once again, as you can see, we are entering flat EMA in the middle of these bars. Consolidation. So once again, this is a no trade zone. What's going through your mind is you want to see the breakout to the downside, fade it. You want to see breakout, pull back. If you're going to get set up here at this key level, you want to go long because we expect new high for the uptrend. So these are the 2 scenarios you're expecting when you're trading in consolidation like this. Always try to analyze the direction which you trade it into. You trade it down temporarily, but if you're going to zoom back, the overall bias is bullish. Okay, market continues going sideways, not interested in taking anything. You can see they all are getting stopped, and now you have fell breakout. Clear consolidation, you broke lower. Even if I'm going to draw a wider downtrend slightly like this, you can see even this one right now has a break, and the new extreme you can see by one tick. So this is nice, fell breakout out of this congestion, and you can also once again argue first leg down, break, second leg down. So this is pretty much the only way how you can find a decent setup today. But this is once again very more advanced. This is definitely not easy for beginner, but if it's the price action rules, we need to learn to spot these. You're expecting high lower for second entry short and never form a market continue working higher. Now mind you, I'm still expecting new extreme. A market suddenly out of nowhere dropped. Okay, sometimes attempt can be considered enough, so I'm not going to argue with the market. We see attempt for a new high, massive push down, so there's a big chance that this massive bearish leg is going to get new extreme. So because I trade the market, I get not the market I want. Right now I'm expecting a setup at the EMA, second entry short. We have a second entry short here, but it's way too far from the EMA. Horrible bullish bar. We created a new extreme. We're pushing above EMA, and this is quite a decisive push above EMA. And notice how strong this push is. Okay, so there's a big chance that this was also like a first leg here, pull back, second leg here. I'm just gonna make it like this. You can see visual aspect of two-legged pullback, and now we're truly gonna reach the new extreme. Okay, the correction was stronger. You can see how strong the uptrend was, how long it was, and because I can see such a massive spike, I'm going to be expecting that we right now are going to test the main new high. Either way, we're breaking this channel. So I have reason to expect new high for this channel. I'm going to redraw the shortened downtrend. I have a first entry long, pullback, second entry long, fire from EMA I cannot take. Okay. And notice what I have. New high, first entry long. We can technically call this double trap because we have a new high, first entry long, second entry long. Actually no, because we have a micro relative here, so this is only new high, first entry long, but this is a visual to like a pullback. You can consider, but this is the setup we are interested in. This is the textbook setup, pretty much the only easy high probability setup for today. New high, first entry long, second entry long, visual to like a pullback, and you have the support being formed at the EMA. So you have two key entry points, great second entry long, great tier 1 signal bar, everything aligns, context aligns. Trend line is new high, downtrend played away to break new extreme, two-legged pullback. This is where everything aligns. Signal bar is perfect. You don't have to be worried. You don't have that much room here. You have enough room for a scalp. You just have to take it. And market rewarded you with a quick, easy scalp. New high was created for this uptrend. Now we fully didn't create new high here, but let's see what's gonna happen. I need to follow. Okay, we're below EMA, so I have nothing more to do than to follow the shortened channels. Okay, just because I expect new high here, that doesn't mean, you know, I'm not going to follow the right now the shortened current trend. So we have bearish micro trend, only first entry short, can we take it? Okay, here the market is pushing above EMA. I was expecting a failed second entry short, but the failed second entry short is below EMA. I want to see it above, so I can't really take it. It still would have survived and would have worked. Okay, we're pushing. I'm going to draw my trend line wider because we are with the direction of the main trend, and the main trend needs to get new high. Okay, we have a new high, first entry long. So what's going through my mind? A second entry long. I want to see second entry long for new high of this channel. EMA keeps holding. Okay, great first entry long. Can get a second entry long, and we cannot. And market just continued working higher, and that's pretty much it for today. Overall bullish structure for today. You want to dissect the price action step by step. Locate the first channel, pay attention to the correction, locate the consolidation if you can see price action going sideways and EMA flattening. Now I didn't take any setup today. I just didn't see that many setups. There was pretty much only one pretty textbook setup today, and I was on my break. I always take a break around this time. Other than that, most of these setups are decent, but they are not super great easy high probability ones. But it's okay, not every single day is going to offer plenty of easy high probability setups. There's a big chance that tomorrow will be much better. Your job as a professional trader is to master the skill of following the rules and being patient. because if you can be able to sit here and not jump the gun, not do any error that will result into you breaking the rules, you're setting a good foundation for the future. And in the long run, a couple months from now, you'll be able to sit in front of the computer without feeling the frustration or the itch to take a setup, because you train yourself and you train your mind to simply follow the rules and just wait for everything to align and jump on the good setup. So I hope you had a good trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.